The question on everyone's mind is the bottom in with Bitcoin? And if not, where will the bottom be? Because if we're able to identify and buy the bottom, we'll see the highest possible returns as Bitcoin appreciates in the future. But at the same time, trying to time the bottom might be greedy when prices have already gotten so cheap. Not to mention, it's near impossible to perfectly time the bottom, unless you use the strategy I'll discuss in this video. So first, I want to take a look at some simple on-chain metrics that could help us identify where the bottom will be, or if we've already seen it. Then, we'll zoom out and consider the greater macro environment for some more context. With this information, I've developed a strategy for myself that will guarantee that I buy the bottom on Bitcoin whenever it comes. I'll walk you through everything you need to know to pull off this strategy yourself and wrap up with some important tax considerations. Let's take a look. When it comes to identifying the bottom in Bitcoin prices, we have years of on-chain metrics to analyze for insight. I've never looked much into these metrics in the past, but I've recently discovered how accurate and telling this data can be. Plus, when combined with things like technical analysis, it can tell a much clearer story about market cycles. Now, you can get super deep into this stuff if you want to, but I found Glassnode to be a great resource for breaking down some of the more complicated stuff into digestible charts. I'll leave a link to them below if you'd like to explore it more for yourself. The first one I want to look at is a series of bear market floor models. This is a combination of metrics that have been used to map out where Bitcoin price bottoms have previously occurred. Most of these lines are some form of moving averages, which is a metric that averages and smooths out price data. This includes the Mayer multiple, which is based on the discount off of a 200-day moving average. It also includes the 200-week moving average. It also includes the realized price and the balance price, which both consider the cost basis that holders have paid for their coins. The last metric charted is the delta price, which has notably never been reached. However, I don't want to focus as much on these metrics themselves as much as the percentage of time where these metrics are in play. Bitcoin has only traded beneath a Mayer multiple of 0.6 about 3% of the time, beneath the 200-week moving average 1% of the time, and beneath the balance price 3% of the time. When Bitcoin broke beneath $18,000, it touched or traded beneath all three of these metrics, something that has only happened 13 days in Bitcoin's history, or just 0.2% of the time. So when looking at Bitcoin's history, this is about the cheapest Bitcoin has ever been based on on-chain metrics. You've only been able to buy Bitcoin at this type of discount 13 days out of the last 4,000 plus days. This means we are definitely seeing prices comparable to previous price bottoms. If these metrics hold true, we would expect the delta price indicator to continue serving as an unbroken floor model, which currently sits at $15,750. And by these metrics, the bottom could be very close or could have already happened. Next, I want to look at something called the Pi cycle bottom indicator. This indicator identifies market bottoms by charting two different moving averages, the 150-day exponential moving average and the 471-day simple moving average, multiplied by 0.745. Note that this multiple was randomly selected because it fit the back-tested data the best, so there is room for it to be proven wrong. However, this indicator has pinpointed previous cycle bottoms within 3 days at most. This happens every time the upper line, which is the exponential moving average, crosses over the simple moving average. While this has only occurred twice, if it continues to hold true, we are expected to see this Pi cycle bottom occur again very soon. According to the Real Plan C on Twitter, this will happen on approximately July 9th, which is already passed if you're seeing this video. It could be a long shot that this metric pinpoints the bottom again, but this is another indicator that could suggest that the bottom is closer than we think. The last chart I want to look at is also from the Real Plan C, and it's called the Bitcoin Gutter Accumulation Channel. This chart highlights the time periods where Bitcoin crosses into a zone that is between 35% and 60% below the 2-year exponential moving average. While this may not predict a bottom, it shows the times in history where Bitcoin can be purchased at a massive discount. If you were to buy in any of these ranges, you would be very happy with your cost basis just a few years later. It's also worth noting that these ranges typically don't last very long, perhaps just 3 to 4 months. So all of these charts suggest that the bottom is either already in or very close to happening. However, it's hugely important to keep in mind that none of these indicators consider the greater macroeconomic environment. We still have increasing inflation, mounting fears of a recession, even globally, and all other markets looking uncertain. Previous Bitcoin cycles have not happened in this type of environment. So as long as things look uncertain for the greater economy, it's probably safe to assume that things could get worse for Bitcoin, even if that invalidates all of the indicators we just saw. So in my non-professional, not financial advice opinion, I would say the bottom is probably not in due to the macro environment. But on the other hand, nothing is certain, and why waste one of the best buying opportunities in Bitcoin's history waiting for slightly lower prices after Bitcoin has already fallen 75% from its highs? I don't want to get greedy and sit on the sidelines waiting for the absolute bottom that may never come. And when it does come, we probably won't even know until it's behind us. But what I can say for sure is that buying within the ranges of the indicators we just looked at has always worked out well in the past. So if we're talking about an asymmetric risk, I feel like I'm risking less by accumulating now than if I were to save all of my cash and try to go all in at the bottom that may never look cheap enough for me to actually hit the buy button. With that in mind, here's the strategy I'm using to take advantage of this historic buying opportunity while also guaranteeing that I buy the absolute bottom of this Bitcoin cycle. For starters, based on what we've seen, it seems probable that we'll retest the recent lows on Bitcoin or perhaps go even lower. So I have some limit orders set from the mid 16,000s to the low 18,000s, and perhaps some of them have already been filled by the time you're watching this video. This is betting on Bitcoin going lower because I will benefit by picking some up at these cheaper prices that I believe to be probable. While this price range may not be the absolute bottom, I think I have a pretty good likelihood of getting filled at these prices, and I'll be happy to buy there long term, instead of placing limit orders at a potential bottom that may never come. But because no one knows for sure what will happen, and I want to make sure that I accumulate some Bitcoin at these historic prices if those orders don't get filled, I'm also using a new dollar cost average strategy. I've recently started using the Strike app to purchase small amounts of Bitcoin every single hour. This means that every 60 minutes, I'm buying Bitcoin no matter what the price is. And the best part is that Strike charges absolutely no fees on these orders, so every cent goes into stacking sats. By doing this, I know I can slowly buy Bitcoin every day, and if it never retests the lows, I will still have accumulated at great prices for the long term. But if Bitcoin does test the lows, or even sets new ones, I'm virtually guaranteed to buy the cycle bottom, assuming it occurs after I started these DCA purchases. I may only get a few dollars in at the absolute bottom with this approach, but I know at the very least I will have timed it perfectly thanks to this hourly dollar cost average strategy. If you want to try this for yourself, I'll leave a link for Strike below that gives you $10 just for signing up. You don't even have to deposit any cash to get that bonus, so you can just snag $10 in free cash or Bitcoin if you want. Do keep in mind that the minimum purchase requirement for these hourly purchases is 50 cents, which comes out to $12 per day or $360 per month. If you don't feel like investing that much, you can simply use the function for a few days or weeks whenever you feel like it's the most opportune time to do so. For all of you responsible taxpayers out there, you're probably thinking that this hourly DCA would be a tax nightmare. After all, each purchase is a new cost basis for your investment, and a separate tax lot to keep track of for future capital gains or losses. 24 transactions a day can be a huge headache to go through, especially if you're doing it manually. And this is definitely an important thing to consider with this strategy. However, Strike will supply you with a CSV file of your Bitcoin trade history if you make a request through their support team. It's a little annoying that you can't just download it from your account on your own, but having the CSV file is what really matters. Using that CSV document, you can upload your transaction data to an automated cryptocurrency tax software and let it handle all of the math for you and or your accountant. I personally use Coinly for this, as it works with all of my different wallets and exchanges, and even has functions for NFTs, DeFi, and manual transactions if you need to make any corrections. I used Coinly for my 2021 taxes, and it made my cryptocurrency tax filing a breeze, so I will definitely be using it again next year, and I can't recommend it enough. I did a full review and walkthrough of the platform in a previous video if you'd like to take a more detailed look at it, or I'll leave a link to the website below. But with all that, I'd be curious how you're approaching the current Bitcoin prices. So leave me a comment and let me know whether you're buying big, dollar cost averaging, or waiting for lower prices. For more on Bitcoin bottom signals, I'd recommend Glassnode's recent video here, which covers some of the charts we looked at in more detail. And I'll also put the Coinly video here if you need a tax solution. Thanks for watching, and I'll see you in the next one.